Hi everyone, welcome back. This is the second part of the video. We are solving 2024 October-November paper 12. So we'll start from question number 11 to 20 today. Question number 11. The cash book of a company showed a debit balance of 3,900. This differs from the bank statement. This differs from the bank statement balance. The bank statement balance includes bank charges of 250, a direct debit of 3,280, and a credit transfer of 300. None of this amount had been entered in the cash book. A payment of $620 entered in the cash book had not yet been presented for the payment. What was the balance in the updated cash book, on the updated cash book? So we need to find out, if I update cash book, what will be the new balance. So right now we can see that the balance in the cash book is a debit balance 3,900. So this is a positive balance. Okay, debit balance in the cash book means positive balance 3,900. And now following information is recorded only in bank statement. Like first one is bank charges. So we need to subtract bank charges of 250. And then there is a direct debit, that means directly deducted from my account, so which is 3,280. Okay, and then last one is credit transfer, that means it is added to my account. Okay, so I will also update this in my account. And the last one is a payment of 620 entered in the cash book. That means this figure that we have 3,900, we already included this 620, and after including this payment, this is the amount that we have. So we don't need to re-enter this one. So if I do this, this would be my updated figure. Okay, so 3,900 plus 300 minus 250 minus 3,280. So new balance is 670. Okay, so this is option B. Next question. 12. Which item will be entered in the debit side of the purchase ledger control account? So when we prepare purchase ledger control account, we'll write down all trade payables related items. So on the debit side, we'll write down the contra entry with the sales ledger control account. Okay, so this will decrease my trade payables. So we'll write down this on the debit side. And discount received. So when we make payments and if we received any discount, that will also decrease my trade payable amount. So I'll write it on the debit side. And the return inward. So return inward is basically sales return. So this we do not write it in the purchase ledger control account. This would be written in the sales ledger control account. So the correct option is only 1 and 2, which is A. (13) A company prepared a sales ledger control account. The balance did not agree with the total of the sales ledger balances, which were 42,650. The following error or omissions were discovered. So when we are preparing the sales ledger control account, the total of that, and when we total individual ledger account, that means individual customers account total, so they are not matching. So right now individual customer total, which is sales ledger balance, is 42,650. Okay, so now question is, there are some errors and omissions we have. Number one, an irrecoverable debt of 500 in the general journal has not yet been recorded in the sales ledger. So it is in this sales ledger we have not recorded this one. Number two, a sales journal had been incorrectly added and must be reduced by 750. Okay, so sales journal that we prepared, the total we have added 750 incorrectly, so that needs to be reduced in the sales journal. Number 3, a sales ledger control account includes the discount received of 400. It should have been discount allowed 600. So in sales ledger we wrote discount received, but it should have been discount allowed, but that is in sales ledger control account. Number 4, sales to J Brown of 640 have not been entered in his account. So we sold to J Brown 640, but we did not write it in J Brown's account yet. Okay? So we need to find out what is the correct total of the sales ledger balance. So to rectify this kind of questions, we need to identify where the error is happening. If the error is in individual ledger, then we will correct it in the sales ledger balance. If the error is with the journal or in the control account, then we'll rectify that in the control account. So for now, this error, irrecoverable debt of 500, okay, which is not recorded in the sales journal. So if I record this, then it will decrease my trade receivables balance minus 500. Okay, this is recorded. This is the incorrect figure in journal. So journals are corrected in the sales ledger control account. So we don't need to do this out here. Okay, and this is the sales ledger control account which included discount received instead of discount allowed. This is also corrected. This will also be corrected in the sales ledger control account, so not in individual customer account or sales ledger. And the sales to J Brown 640 had not been entered in his account, so we need to write it because it is an individual customer account, so it needs to be added to this sales ledger balance. So if I do this, then is 42,650 minus 500 and then plus 640. So the answer is 42,790. Question 14. The current asset of a company included the balance of both the rent payables and rent receivables account. What do this balance represent? In the current asset, I wrote rent payable. Okay, so that means this is my expense, rent payable. But if I write that in the current asset, that means I paid rent in advance. Okay, so prepaid rent. And if I write rent receivable, which is my income in current asset, that means these are my accrued rent which I have not received yet. So rent payable is prepaid, these two, and then rent receivable is accrued. So correct option is C. 15. The following information is available for a sole trader. Allowance for irrecoverable debt at the start of the year is 1400. Total trade receivable at the end of the year is 36,000. At the end of the year, it was decided to write off $1,000 as irrecoverable debt and maintain the allowance for irrecoverable debt at 3% of the trade receivable. This is very simple. So first we need to find out what is our trade receivable balance. So right now trade receivable is 36,000. In that we subtract 1,000 for the further irrecoverable debt. So now new balance is 35,000. Okay. So we need to calculate provision for irrecoverable debt, which is 3%. So 35,000 into 3%, which is coming to 35,000 into 3%, which is coming 1,050. So this year the provision for irrecoverable debt should be 1,050. Last year or the starting of this year the opening balance was 1,400. So our irrecoverable debt account is decreasing, okay, from 1400 to 1050. So question is, what is the entry in the allowance for irrecoverable debt account? So normally irrecoverable debt account has a credit balance, but right now we have 1400 out here. I just need 1500. Okay, so I need to decrease this amount by 350. Correct. I'll debit this by 350. Correct answer is C. Debit it by 350. 16. A sole trader statement of profit and loss shows the following information: opening inventory, operating expense, profit for the year, and then closing inventory is 10% lesser than the opening inventory. All goods are sold at a markup of 50%. What were the purchases for the year? Now I'll give you a brief format here. Okay, so normally we'll start with revenue, revenue, and then we have cost of sales. Okay, so cost of sales has opening inventory, and then we have purchases, and then we have closing inventory, and then we find out gross profit, sorry, gross profit, and then in that we subtract operating expense, and then we have profit for the year. Okay, so this is how it looks like. Right now in the question they have mentioned that the profit for the year is 5400. Operating expense, which we subtracted from the gross profit, is 3000. With the help of this I can easily find out what is my gross profit. So gross profit should have been 8400. Simply adding 3000 to 5400. So this is my gross profit. So I need to find out cost of sales. So cost of sales is all the goods are sold at a markup of 50%. That means whatever the cost I had, I sold that inventory and made a profit of 50% of that cost. Okay, so if my markup is X, and then if I calculate it 50%, it should be equals to 8400. So if I do cross multiplication and find out the value of X, so X equals to 8400 into 100 divided by 50. So that is 16,800. Okay, so my cost of sales out here is coming to 16,800. Okay, now we need to find out the closing inventory and opening inventory so that we can easily find out the purchase. Opening inventory question says 5000, and purchase I don't know. Okay, so we'll just keep it question mark out here. And the closing inventory is question says that it would be 10% lesser than the opening inventory. Opening inventory 5000, 10% of 5000 is 500. So 5000 minus 500 is 4500 is my closing inventory. So closing inventory is normally subtracted to find out the cost of sales. Right now cost of sales is 16,800. Okay, So if I want to find out the purchase, we'll just go in a reverse order. So we'll add this and we'll subtract this one to find out the purchase from the cost of sales. So 16,800 plus 4,500 minus 5,000, that will give you 16,300. So this is your 16,300 purchase. The correct option is C. 17. L and M are in partnership, sharing profit and losses in the ratio 3:2. They have the following current account balance. This is 31st March 2023 and 31st March 2024. That means this is the beginning of the year, this is the end of the year. Credit balance for L and credit balance again at the end. For M is a debit balance and again debit balance at the end. The balance at 31st March 2024 after taking into account the following, which is after we included all of this, interest on drawings, interest on capital and drawings amount. So this is the balance that we have. Question is, what was the residual profit to be shared between L and M for the year ended 31st March 2024? Okay, so this is actually easy, but it needs little explanation, so I'll take spreadsheet out here. So I'll make this L and M. Let's consider that they are the partners we have, and the information provided in the question is that this is in the beginning of the year. Okay, L has a credit balance of 3,000, whereas M has a debit balance of 4,500. Okay, beginning of the year. Now at the end of the year, that means basically after we make a total, out here, they are talking about this balances. So for M, it is still debit balance, okay, which is 6,200, and for M it is a credit balance. For L it is a credit balance of 4,200. Now these are the balance BD. So balance BD, if it is here, balance BD is here, then the balance CD would be on the opposite side, balance CD. So for M, balance CD of 6,200 is here, okay, and for L, balance CD of 14,200 is here. I think this space are not enough, so let me add some more out here. Okay, so this is the beginning of the year, so balance BD. And now during the year, interest on drawings is 1,000 and 1,500. Okay, so in the current account we'll write down interest on drawings, which is 1,000 and 1,500. And then we have second one is interest on capital. So interest on capital we'll write down here. Interest on capital is 3,000 and 2,000. Then last one is drawings. Okay, so drawings we write on the debit side, which will decrease my capital balance 10,000 and then 15,000. So if I write down the debit side and the credit sides, they would not match, and that is because it is a share of profit. Share of profit is not mentioned. So we need to find out what is my share of profit. So here, so how much more I need? to make it 25,000. To make it 25,600 is 25 minus 6 is a 19,200. Okay, I need 19,200 to make this equal, and then out here is 21,000. Out here it is 80. The total on the debit side is 21,000. Total on the credit side is 8,200. So 21,000 minus 8,200. 8,200, that is 21,000 minus 8,200. That's giving 12,800. So this is the share of profit for. This is the share of profit for M. So we add them together, and this is the total profit available to distribute between the partners as a share of profit. Okay, so which is this plus this. So 32,000. Hope you understood this. 32,000 is D, option D. 18. A company issues shares at premium. At which financial statement would the share premium appears? A. Statement of changes in equity and statement of financial position. B. Statement of financial position only. C. Statement of profit or loss and statement of financial position. And D. Statement of profit and loss only. When company issues shares at premium, it definitely goes in statement of financial position. Okay, but when you prepare a statement of changes in equity, that time also we need to show like there is an increase in capital reserve. So it would be appearing in both statement of changes in equity and statement of financial position. 19. The statement of financial position of a company at 31st December showed the following. Issued share capital 200,000, ordinary share of $1 per share, 200,000. So this is the face value of the share. During the following year, the company carried out the followings. On 1st January, made and right issue of 1 ordinary share for every 5 ordinary share held. The shares issued price were 1.5 per share, per ordinary share, and the issue was fully subscribed. So here we are selling the shares, or we are giving them right shares. So the selling price is 1.5. That means we are issuing at premium. Okay, because the face value is 1, we are selling it for 1.5. Second, on 1st July, made a bonus issue of 1 ordinary share for every 4 ordinary share held at that date. So after issuing the right share, how much ever we have, in those shares we give them bonus shares for 1 for every 4 ordinary share held. Question is, what was the amount of cash received by the company in respect of this transaction? So first one, let's calculate how many shares we are giving. So company had 200,000 shares. So in this, company decided to give 1 shares for every 5 ordinary share held. Okay, so we are giving them 40,000 shares. Now 40,000 right shares are issued at 1.5, which is equals to 60,000. So by issuing right shares along with the premium, we collected 60,000. And number 2, bonus issue. In bonus issue, we do not sell shares, we give shares for free, so there is no cash collection. Okay, so we did not receive any cash in bonus issue. So altogether the total cash collected is 60,000, which is B. And then the final one, for today. 20. Which ratio measures the efficiency of the business? So there are ratios that we have grouped together, basically three groups: profitability, liquidity, and efficiency. So there are four ratios given here: asset test ratio, markup, non-current asset turnover, and return on capital employed. Okay. So if you don't know that, I will show you the list right now. So these are the efficiency ratio we have. Okay, non-current asset turnover, trade receivable turnover, trade payable turnover, inventory, trade rate of inventory turnover. So these are the efficiency ratio. Okay, and then these are the profitability ratio that we have: gross profit margin, markup, then profit margin, return on capital employed, expenses to revenue ratio, operating expense to revenue, and these two are the liquidity ratio, current ratio, and asset test ratio. So in the question, they are asking what are our efficiency ratios. So efficiency ratio is in this case non-current asset turnover, C. Okay, with this we come to the end of today's video. I hope you like this, and if you are new to the channel, like, share, and subscribe. I'll see you in the next part.